Yeah, hello traders. Anthony with you here again on this topic, market structure. All right. This topic you really want to pay attention because I've learned about price action, major levels, support and resistance, all of those stuff, which are prerequisites to this course. You also need a very good understanding of this aspect. In fact, this is the smart money concept proper. All right. Your understanding of market structure determines how successful you become with smart money concept because you must understand market structure. You must understand market structure. You must understand market structure. You can hear my emphasis, all right? And you can tell how important this particular aspect of the course is because your non-understanding of this aspect of the course will affect you greatly. In fact, you not understanding this aspect means you won't understand anything moving forward. So you really need to pay rapt attention when it comes to market structure. You really need to pay rapt attention. Take out anything that's going to distract you. Ensure you watch this video over and over again until it starts making sense. On my own side, I will try to give a very explicit explanation that even a kindergarten student would understand. I will try my possible best. But you also have to try your own best to understand all the jargons I'm going to be saying here. Please, I am literally begging you. Okay, market structure is simply how market moves. Just like we said, price action is still a part of price action. Is part price action because that is actually the way market moves. All right, market goes up and down. Now, when the market is going in a particular direction, you know what we call trend. When they say trend, trend simply means the market is flowing to the upside, right? It's trending to the upside at a particular time, or market is trending to the downside at a particular time. So we are going to be treating um, different market structure, which is the uptrend, the downtrend, and the sideways movement. All right. So this particular one, let's first talk about um, the sideways movement of the market. Just like I described, just like I described on the issue of support and resistance, where you have your selling, and your floor in a house, and then you have price moving in a particular range without exceeding that range, breaking any of the support, break without breaking the support or resistance. That is where you have a sideways movement of the market. That's where you have a sideways movement. So let's say price is just going up, bouncing down, up, down, up, down, and then the price is maintained within this area for a particular period of time. This is this particular concept is relative to time frames. All right, a, a market can be moving sideways in a higher time frame but trending in a lower time frame. Deeper in the course you will get to understand. So let's say this market is just moving. It went up, down, up, down, up, down, at least three times. Like touches top three times, touches it down three times. Once we have it up to at least three times, we could possibly say that this market is ranging. It's not, it's neither going up nor down. Now, one thing you also have to take consideration for a trending market, it's not necessary that when it's bouncing up and down, it's going to be getting to the top or down all the time. The most important thing is that it has a specific range. Like that is what you how you identify the market that is ranging is the particular aspect where it touches at least maybe two or three times um by at the top, and then at the bottom you have to mark those parts. Let's say, how do I get you to understand this? So as this market is moving up and down, so you choose the highest point for your ceiling and choose the lowest point for your um floor, which is your support. So you can see that even though the market, when it was moving, it didn't touch this bottom part and didn't touch this top part, but then again we still have it around this area. So when the market is confined at a particular area, then we can say that the market is moving sideways. It's not creating a very any nice structure. Most of the time, it could be choppy. Uh, it could be a very choppy market, just going up and down, some kind of erratic movement. Noisy. You can easily see the market project the upside, rejecting back again. No, this is um a particular period where you have to stay away from that market, be it GBP USD, Euro USD, the USD, NZD USD, BTC USD, ETH USD, or the indices. All right. So that's that about your sideways movements of the market. So the next topic we're going to be looking at is your uptrend. All right, your uptrend. So you can have markets moving down, creating those stuff. All right, have something like this. Can have something like this. So like this, this. All right. Okay. Now, a quick example would be that at this point, Mr. Freedom, but okay. Now, a quick one will be that at this side of the market where it's going down, you could possibly see that this area it is going down. All right, it's going down. This area it's going up. So this part of the market that is down, that's pointing towards the downside, is a downtrend. While this part that is pointing towards the upside is an uptrend. Okay. So then again, how do you now know what is a downtrend and what is an uptrend? Now, let's talk about the downtrend now. Let's talk about the downtrend and then move to the uptrend. Okay. Now, looking at this downtrend, as we have established, how you will know it is that, first of all, from the origin of the move, from where the move of the downtrend started, we could call it the high of the market. We'll call it the high, all right? So this is the high represented by capital letter H, okay? This is the high. And then when it comes down and makes a swing low, we could call it the low. It's called the low of the market. All right, the low of the market. Please listen and listen attentively. This is the high because this is where the move of the downtrend started, because it is the top of the downtrend. Let's say when we are talking about ceiling and floor, when it bounces off from the ceiling and then it's reverting to the downside, that particular spot on the ceiling where it bounces is what we call the high. All right, is what we call the high. Refer to the previous video where I talked about the ceiling and the floor, which is support and resistance. So the high is um, immediately it bounces on the top of the roof and then it's going down. That place is bounces and then leaving and then going down. It's called what? It's called the high. The high, because that is the highest point where price got to before going down. All right, then it goes down, creates a swing, is what we call a swing. Moving forward, you get to understand. Look at this area of price. You see this area, you see how price took from this ceiling. All right, it came down to form a swing here. All right, went up again, came down to form a swing. This is what we call swing. All right, so it formed this swing. The swing low is called a swing low. When you are in a downtrend, every swing that is going down is called swing low. The one going up is called swing high. All right, so this one is swing low. Then immediately it got to this point, it bounces to make a little bit of a high that is not up to this high. Let's come back to this. Look at where my cursor is. You saw, like I said, this is the ceiling where it bounced from. It went down to this point. You can see where it went down to, and then it went up, but it didn't go up, get up to this point. So if this is the high and this is the low, so this, because this is high but it's not as high as this, so we can call this one a lower high. Are you getting? We can call this a lower high. I can hear you say, yes, I'm getting. All right. We can call this a lower high. The same thing here. It went down, formed a low, then went up. All right. But coming up to this point, it's not up to this point. As long as it went up even a little bit, but not up to the previous high, we can call this what? A lower high. So this high is known as what? Lower high. Can I hear you say lower high? Yeah, that's what it's known as. All right. It's known as a lower high. Now it came down. All right. Now coming down, referring to this particular chart again, are you seeing well what we are seeing? You can see what happened here. You can see it went up and then came down. All right. It came down. Yeah, it came down, even though it made a little bit of flagging up. Yes, but this is typical market cannot be like a textbook. All right, so it came down. You can use this. All right, it came down. All right, and then this is the down. All right, and this is the down, which is lower than this low. This place is lower than this low, right? So is this place lower than this low. So because it's lower than this low, we remember, because this high is lower than this high, we call it lower high. This is a low. A low that is lower than this would not be what? I can hear you getting the answer saying lower low. So that's lower low. So we'll represent it with double L, lower low. Hope you are enjoying this class. Yeah. So this is it for this particular one. Again, as an intelligent student that you are, you already know that this is what, again, lower than this high. Somebody will say is a lower high. No, just call it lower high. Why? Because you are referring it just to this high. All right, this entire place is high, but it's not as high as this, so we keep calling them lower high. Okay. If you say lower high, it's not bad. It's the way you understood it. You can still put it that way, but that means as you are going low, you keep adding more L's. So you see, you keep adding more L, and if you are labeling it, you keep getting your chart dirty. So it's better you just leave it as lower high. All right. The most important thing is that you understand what you are doing. So even if you decide to call it lower high, you are correct. It's from your understanding. And then when you come to this place, you can call this lower low. It's up to you. But again, in order not to get your chart dirty, and you can see how clean my chart is. So try to keep your chart clean. So it's better you just call it a lower low again, referencing it to this point. Alright, is when you reference it to this point, you probably call it lower low, and then you start counting lows as they are going down, which is very elementary too, but depending on your understanding. So you can call it lower low just for the sake of clean labeling. Alright, moving forward. Now take a very keen look at this structure. This is exactly what we call market structure. As the market is moving and making these patterns, we call them patterns, flagging up and down, giving you waves. The market does not move straight. It doesn't just fall like this. Yeah. If not, if you see that the market is falling, you just put sell and you keep making money. You know that. But market doesn't work like that because it's human behavior, and human behavior is not ideal. Real life situation shows that humans are unpredictable. So the market moves in wave-like situations. So you keep studying the movement of the market, and where you think, okay, the history is about to repeat itself, that's when you enter and try to make money from the market. And this entire thing is all called prediction, and there's not so much difference between trading and casino. The only difference is that in trading you can decide when to put your money on the line, uh, which is the time that you have identified a pattern that is familiar to you, that you know that you are about 70 to 90% sure of making money from that pattern. Now in casino, you must have put your money on the line before seeing a pattern, before a pattern comes handy or appears. So casino can be gambling, trading can also be gambling if you don't have patience and discipline. All right, this is the only thing that differentiates casino and trading. It's all about discipline, patience, and stuff, so on and so forth. So when you have patience, when you are disciplined enough to wait for your chart patterns, which you know how they look like when they appear, and make your decisions, do your proper money management, then you will have edge, and you can as well become a profitable trader. So that is by the way. Let's continue. Now on this particular one, you can see how price neatly went down. All right. And then now somebody will say, yeah, we have a lower low. But then we are supposed to have this stop somewhere here. But then we are having it above. You can see it came and broke through this area. All right, and this is when you start perceiving that price is changing direction. Whenever you have something like this happen, you know, on a normal situation, you would have had price come to somewhere here and fall down back, or even might sometimes trade up to this point, making it to become a resistance and then falling down. But then no, it did what? It went above this previous high and then created what? A high. All right, created a high. Because this high is higher than this high, we will no longer call this guy what? Um, a lower high. We will now call it a high. Remember, you will now remove the L and call it what? A high. Supposing you call this guy lower high, then you could possibly call this guy lower high, indicating that this high is higher than this. So now you're going to call this guy what? A high. So because it's higher than this one, so you call it a high. Just a high. All right, just a high. Now when it did that, it came down, but it didn't go as down as this one. It didn't get down to this point. You can see that again, that it didn't get down. It didn't get down to this particular area. All right, normally we would have expected it to break through it so that we can call it lower low, right? But then what happened is that it got to a particular area, found itself a support. All right, found itself a support and started going up, which is what? A little bit higher than this. So we can call this a low, removing one of the L's. Please listen attentively. Can call this a low. All right, so this is a low. I hope you are getting it. I hope it's entering. So this is a low. Now moving forward, a brilliant student would have guessed, well, if we're having these highs lower than this, I will call them lower high. Now we are having a high higher than the previous high. So we could possibly do what? Call it a higher high. All right. So this is what? A higher high. And this is what? Somebody tell me something. Now since we have um since we have this low to be higher than this low, all right, referencing this to this, we could possibly call here what? Higher low. Higher low. Please, you have to replay this class so you get an understanding. Watch it at least 2 times. Make sure you understand it. Give yourself an assignment, go through the charts, uh, identify the patterns on the chart, and then you must have understood. So we're going to the chart immediately to its practical. So now you are having what's higher low. All right, you can see that, and then you are having higher high. All right, so at the point where you are having this high to be higher than the previous high, it's called break of structure. Some people call it break of market structure, BOS. All right, and remember, when we're having this low to be breaking, to be going below this, we call it break of structure as well, which some people call break of market structure. All right, so this is it, short form BOS. So we are having break of market structure. You can see how this is typically how market moves. Sometimes it might not be as neat as this, but your expertise will help you to identify the movement easily on the chart. So it's all about practice, 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 practice. The more you practice, the more you get to understand it. All right, the more you get to understand it. So you can see what's going on here. You can see what's going on here. All right. Um. Yeah. Higher high. I don't want this class to be very long, so you don't start feeling like you have taken too much of information. So um, this is what's higher low. All right, and so on and so forth. You can just take a snapshot of this and watch this again. All right. By the time you watch it again, and then you try to understand what I just did, then you move to the second part, which we are going to be going to the chart to demonstrate this live. Okay, thank you, and I'll be back soon. Bye for now.